Are you unsure whether to invest in the stock market or in property? Well, this video is perfect for you. In this very video, we discuss the pros and the cons of investing in the stock market or equities and the property market. But we also end with a really important point where we discuss several key factors to consider before even considering making such an investment. So watch this video all the way to the end to answer the question whether you should invest in stocks, say the S&P 500 or something similar, or in fact, property. For those of you that don't know me, my name is Marco. I'm a portfolio landlord, property investor, developer, and mentor. And I'm incredibly passionate about helping people invest in residential property. So before we get on to the main part of this video, which details the pros and the cons of both the equities market and property, let me make a really important point, which is that I've been investing in the equities market for 15 years. I've also been investing in property for around about 10 years. However, I've worked within the property sector prior to that initial investment. So a really important thing to think about is I've had incredible success when it comes to property. In fact, so much success, and I'm so well versed in several strategies that I do consider myself an expert in property. However, when we come to the equity side, I'm certainly no expert here. So you may see this video as slightly biased from a property point of view. However, it's only biased because property has been so successful for me. Otherwise, I certainly wouldn't shout about property. So first of all, let's talk about the stock market, and let's talk about the advantages of investing in the stock market or equities or anything on that nature. The first benefit I see to investing in equities is it's much easier to diversify. You know, within 10 minutes, you could buy a handful of stocks or ETFs or trackers, and you can be very well diversified. However, when it comes to property, that's not necessarily true. It could take you several years to become diversified within property. So that's a real benefit of investing in equities, is that diversification is far quicker and easier than property. The second benefit when it comes to investing in stocks is that you can invest with very little money. You know, you could put £1 into a stock. Now, you can't do that with property, or at least with typical standard property strategies, you need to be funding it with a 25% deposit, which is normally 5 figures plus. So yes, there are no money down property strategies you can embark on, but they're much harder to do than more traditional type property strategies. So that's a really great benefit when it comes to buying stocks, is that actually we don't need to save a 5-figure deposit. We could pretty much invest with whatever we've got in our bank account right now. The third benefit to investing in the equities markets is liquidity, and this is a general benefit. There are some stocks and some equities where they're actually rather illiquid. However, that's not the norm. The norm is that most publicly listed companies are fairly liquid. And what this means is if you want to sell or dispose of that asset, you can do so at the click of a mouse button and you can get that cash very quickly. However, when it comes to property, if you want to liquidize your assets, again, you're looking at months, maybe even a year to get that cash out of the deal. So the fifth and last benefit when it comes to investing in the S&P or any particular stock is, typically speaking, it tends to be a more passive investment. Now, what do I mean here? So yes, you may conduct quite a lot of research before deciding to buy that particular stock. And of course, you're going to have to conduct research from ownership to make sure that you still want to hold the stock and it's right for your portfolio. However, that being said, the work that you have to put in for that is normally quite minimal compared to the property side. If we're buying property over here, that's really a labor-intensive process. For anyone that's bought property or in the process of buying property, you'll know it's very difficult and it takes a lot of hours and days and months to get a really good deal across the line. And you know, we can take this even further. If you're investing into a tracker and you have no interest in the tracker whatsoever, you know, you're not going to keep up with researching how that market or industry is performing, then there's no work to be done. Maybe you're setting up a standing order into your ISA every single month, which then executes on the first of the month and buys that particular ETF or that particular tracker, and it's wholly passive. So if passive is important to you, then equities could be better suited for you. However, there is an option to invest in property in a somewhat passive manner, which maybe I'll touch upon in the remaining part of this video. Now, if you're getting use from this video, please do consider hitting that like button. It will help promote this video to more like-minded viewers. So let's come on to the disadvantages of investing in the stock market, and the first being the short-term price movements and the volatility within those price changes. So what you'll find in the equities market is short-term, a share price can fluctuate quite wildly, and if you want to sell, you maybe have to accept a steep loss to part with that share. However, when we come to the property market, this typically isn't the case. Property prices don't fluctuate widely in such a short span. Yes, they fluctuate, but I'd argue not as much as the equities market. The second disadvantage of investing in the stock market are company-specific risks. So for example, let's say you bought a particular share of company A and company A goes belly up and folds. Well, all of a sudden that share price has gone from whatever you paid for to either something very low or zero. So that's a risk you have to be okay with if you are picking single shares and you do not have a diversified portfolio. This risk is unlikely to transfer across into properties, unlikely that a single property you have is going to go from, being worth say £200,000 to zero. The third disadvantage of investing in the equities markets are the geopolitical risks. And to some extent, this can be an advantage if you are particularly lucky and investing in themes. However, generally speaking, these are risks. So if something happens half the way across the globe, it may in fact impact on the company you're investing in. Now, it's very difficult to control these types of risks, they just happen. So we have to be okay with them as an investor investing in the equities market. However, when it comes to property, these risks are somewhat dulled down. Yes, there are still political risks when investing in property. However, geopolitical, probably a little bit too far. Property is much more isolated and localized as opposed to equities that truly is a global asset that is influenced by other countries, whereas property, in my opinion, isn't influenced by what happens halfway across the world. The fourth and the last disadvantage when it comes to investing in the stock market, and this is one that a lot of pro-property people often cite, is that owning something in the equities market, say a share or a stock, that's not a physical asset. Don't get me wrong, it's still an asset, there's still a piece of paper that says that you own whatever percent of that particular company. However, it's not a physical asset, it's not bricks and mortars. It's something maybe we can't even leverage against, which we'll come on to very shortly. So again, property is bricks and mortar. There's something there, something tangible, something physical that we can hold to our name. So there were the disadvantages of investing in the equities market. Now let's come on to property. We'll start with the pros and the advantages. The first advantage when it comes to investing in property, and this follows on very nicely from our previous point, is property is a tangible asset. It's bricks and mortar, you have something physical to show for your investment. We'll move on because we've already discussed this point. The second point is that we can leverage this investment. So yes, we can leverage in the equities market, but it's not certainly recommended, and it's very much for the advanced players in the market. However, when it comes to property over here, leveraging is actually the norm. A lot of people, a lot of investors will buy with a mortgage, typically an interest-only mortgage, so they're only serving their interest. And the beauty about leveraging in property is that you can make your money work harder for you. You can spread that money you've got over several properties and not just one. And therefore, you can benefit from several lots of capital appreciation rather than just one, which comes very nicely onto the third benefit, which is capital appreciation. And this is where the majority of wealth is made in property. And this is simply where we have an asset, and let's say the price of this asset could double in the next 10 or 12 years, something like that. And we can either take out some of that growth through refinancing or through mortgaging at a later date, or in fact we can bank it and know that we've got this equity in the property that we can do something with at a future occasion, or we could sell the property and realize that equity we've generated throughout those 10, 12 years, etc., and do something meaningful with that. And an important note on capital appreciation, yes, of course you can get that in the equities market. There are a lot of growth stocks which essentially aim to increase the share price of that particular stock. However, that's just one element of the equities market. There are other types of stocks designed for other types of returns. Which brings me very nice onto the fourth benefit and the fourth advantage of investing in the property market is that property is income producing. So if you're looking for an income, property arguably is one of the best asset types you can invest in. Now it all depends what kind of income you're looking for. So you can invest in property at very high yields undergoing some particular strategies. However, that being said, that normally comes at a price. And what's that price? Normally it's capital growth. So in property, like most investments, you have kind of a balance between yield and income and capital growth or capital appreciation. And it's about finding that sweet spot that works right for you. If you are lucky, you can get both. However, normally speaking, you have to forego one to get the other. Now, of course, there are stocks and equities you can buy for an income. However, what I find when it comes to property, and I really can't find it in the equities market, is with property, it's possible to get A, a very good income, B, very good capital growth. So simultaneously, you can get the best of both worlds. Whereas when we come to the equities market, it's a little bit trickier to get that. Yes, there are stocks that can give you potentially a great capital growth, but they don't pay any dividends. They don't give you an income. And vice versa, there are great equities you can buy for income, but if you look at their share price, they don't tend to go up. So this is why I'm so pro-property in the sense that yes, it gives you an income and it pays you on capital growth. So they're the benefits of investing in property. And now let's come on to the cons. So the first con, and we've already touched upon this briefly, is to invest in property using a standard strategy where we're buying with a deposit, say a 25% deposit. Well, you could argue it's a high initial investment, and some people that have, say, less than £10,000, it rules them out the market, whereas those individuals can quite easily invest in stocks and shares. So yes, that is quite unfortunate, but as we've already discussed, there are some no money down type strategies that may be of interest. The second disadvantage of property is it's a fairly illiquid asset in the sense that it could take months to sell. The average property in the UK takes 5 months to sell. So if you're wanting your cash now, property may not be right for you. Maybe you want to invest in equities and you can cash out at the click of the mouse button. However, that being said, the fact that property is a liquid by nature is actually, in my opinion, quite a good thing. It kind of forces investors to hold on to the property and make long-term decisions, which I believe is great when it comes to investing. So let's say you wake up one morning and you decide you want to sell your house. Well, if you wake up the next day and decide, right, I don't want to sell my house, your house isn't already sold. Whereas if you invest in the equities market and you say, right, I want to sell something, and you log onto your laptop, you can sell it right then and there, and the next day you may very well regret it. The third disadvantage of investing in property is the management and the maintenance. So just like any normal asset, when you invest in that asset, we ought to manage and maintain it to make sure it's being performed. Now, with property, we have a physical asset, so this is almost arguably harder than something that's not physical because we have to maintain the fabric and the structure of the building. But not only that, we need to manage it with the tenants in place and then, filling the property with whoever's moving into it after the tenants vacate. Whereas when it comes to the equities market, generally speaking, less work is involved to manage and to maintain our investment. Yes, we want to stay current to what that company or to what that market is doing, that's imperative. However, there's no physical maintenance that needs to be carried out. The fourth disadvantage when it comes to investing in the property market is it's very difficult to come across a good deal, and it takes a long time to get that offer accepted. So you could be looking for, say, 3 months until you get your very first property offer accepted, which is, believe it or not, fairly normal. So if you don't have that time, if you don't have that energy to look and invest in property, perhaps property is not right for you. That being said though, we do offer a portfolio building service where we can find property on your behalf quickly and without any of your effort. So if you are looking for a passive, hands-free way to invest in property, consider our portfolio building service. The link is in the description. The fifth disadvantage when it comes to investing in property is the lack of knowledge. There's a famous saying, you don't know what you don't know, and I've seen a lot of people become burnt in property by jumping in headfirst, they've watched Homes Under the Hammer and they've paid too much for a property. So if you are wanting to learn a bit more about property and increase your knowledge and confidence, consider my coaching service. Again, the link is in the description. Now, with lack of knowledge, this is also applicable to the equities market. If you don't know what you're doing in the equities market, I'd highly recommend not to invest, or if you do, at least do it in a diversified manner, maybe through a tracker or a fund or something of that nature. Do not pick single stocks. You're highly likely to underperform the market. So there we have it. They are the disadvantages of investing in property. However, before I leave you, I want to give you 3 really important factors to consider before making any investment decision, whether you're investing in the S&P 500, FTSE 100, whatever, or property investing, buy-to-let, HMOs, commercial. 3 really important things to consider. The first is time and effort. How much time do you have to allocate to investing in this particular asset class? How much effort are you willing to exercise to make this happen? If you've got lots of time, then you can be doing lots of kind of creative, labor-intensive property or equities type strategies. If you don't, maybe you need more of a passive approach. Maybe you need to be investing in trackers and ETFs or actively managed funds, or perhaps paying companies to source and find you properties. The second factor to consider is income. How much income do you want this investment to generate? And of course, everyone says as much as possible, but realistically, what income are you expecting from the initial sum you're investing? And that kind of should somewhat dictate your investment. So for example, if you're starting out, you could be in your teens, your 20s, 30s, 40s, whatever. Probably income is quite important to you. You want to maximize your income so you can reduce your working hours, say go from 5 days to 3 days per week. So therefore, do you want to be investing in investments that give you a high yield? Probably yes is the right answer. The third and final factor to consider is leverage. So do you want to leverage in your journey? And what this means is, borrow money to scale and to make this happen quicker. Now, as I've already mentioned, in the equities market, it can be done, but it's done at very high risk and it's not standard. Whereas in the property market, leveraging is the norm, irregardless of age. So you could be 80, 90 years old with a buy-to-let mortgage, that's completely fine. Lenders are okay with that. So if you can leverage in your property investment journey, which I'm not saying to do, but to consider, then you can scale that journey much, much quicker. You could go from 1 to 10 properties in years and not decades. And as we've already mentioned on the channel, if you do leverage and you end up buying more properties rather than just 1 or 2 with your cash, therefore you're maximizing your return because you're benefiting from 5, 6, 7 lots of capital appreciation rather than capital appreciation on just 1 or 2 properties. So to recap, we've discussed the pros and cons of both investing in the equities market and investing in the property market. And I hope by watching this video all the way to the very end, you now know which is better suited to you. Now here's the thing, you can invest in both, and I invest in both, and I highly recommend that you invest in both to have a diversified investment. Now, if you have got value from this video, or in fact if you've got a question, please do pop it in the comments below, and as you know, I'll respond to all comments personally on the channel. Now I'm going to let YouTube decide what to present to you to watch next, and I'd absolutely love to see you on that very next video. All the very best with your property investing week. Goodbye.